What is going on, guys? Another weekly breakdown for you here of all the valid DTG system trades last week. And starting off, I just want to say if, again, these concepts, what you're going to look at on the chart right now, may seem confusing to you. If you've been watching my videos for a while, you might be starting to get the idea and the hang of it and the different terminologies. But for those of you who are new, you're going to be looking at this and you're going to be thinking, whoa, what the hell is going on here? This is all very confusing. There's a lot of information. There's a lot of noise on the chart. And I just want to say that obviously going through the week, you're not going to have all of this on the chart. I've just drew all of this up during the back testing session with the DTG Academy. I've just uploaded a 45-minute video there breaking down all of these setups. But as the days go by, you wouldn't have all of this stuff on your chart. You'd be deleting it. You'd be refreshing the analysis, the bias, the direction, the key levels, etc. So if you are confused or you're feeling overwhelmed by all of the concepts that I'm about to talk about, it's fine. You're going to learn about it in the academy. You will understand this once you join us and complete the course. It's all there for you to understand how I find liquidity, how I find these key levels, how we find our entries into the market. Okay, so don't stress and let's get into the video. So the first setup here was on Monday, and I was actually on holiday uh, up until I think this point, or this point. I was on holiday up until this point right here. So I actually took this setup right here while I was away, and it was a winning trade. Beautiful. You can see the video I just uploaded here, but my profit from this trade is right here. You can see this is where I took the entry right here. DTG 15-minute signal aligning with sell bias starting the week strong. Strong, right? Nice little 4.3 out of there. And because I was away and because I was quite sick, I've been quite sick this week. I was like, you know what? Let me just call it a week. Let me take the profits. Let me take the W. I made about 3% on my account. I'm happy with that. I'm chilling for the rest of the week. Um, Although I was still uploading all of the breakdowns and analysis within the Discord anyway, as we can see right here, the 4th, the 3rd, the 2nd, the 1st, the 29th, 28th, 27th. So they were all still uploaded. I was still keeping members in the loop and breaking down the charts and breaking down trades, etc., and doing some analysis. But I just didn't execute on any more trades myself personally, just because I was on holiday. I wanted to enjoy myself. But this was a 1 to 2 trade, bouncing off our key daily level, grabbing bearish liquidity from TLS and break of structure here to the downside, then giving us a 15-minute DTG indicator, sell signal, as we can see. Entry, stop loss, take profit 1, take profit 2. Beautiful, right? That ended up running for a 1 to 2 with managing risk here, moving stops to break even once we got this bullish closure, but price didn't come back to break even and absolutely drove down there about 70 pips profit. And that was the setup on Monday. Tuesday, there was a few setups here with this beautiful move to the upside, strong bullish structure, strong bullish direction. Most of our key time frames aligning bullish with confluence and entries. Again, this was a 15-minute IBO right here, 15-minute IBO. This was break even. Then another 15-minute buy signal right here. This was then we managed risk by moving stops underneath this bearish 15-minute candle closure. Then price just continued to push up. So that would have been a 1 to 2 risk reward ratio, just over 100 pips. And another 1 to 2 risk reward ratio trade here a little later on in the day, all following the bias, the structure, the momentum, bullish to the upside with confluence. Break and retest here, break of IBOs, and also AOI breaks over here, which is our key levels, AOI key levels. If we have a look right here, we can see gold breaking above 1, 2 key levels, and giving a beautiful buy signal, and a 1 to 2 risk reward ratio there, 62 or so pips, right? Then moving on to Wednesday, it got a little bit choppy, a little bit mixy in here. And this is where we would have seen the first loss of the week, because we had you can tell it was choppy because look, we had a sell, then we had a buy, then we had a sell, right? Not ideal in these circumstances, but first trade, basically, there was some bearish bias with confluence, with a rejection of the SF level here, as well as grabbing liquidity, driving down, breaking below key AY levels. If I just go back, and there we can see the key levels right here, 1, 2 AY levels provided by the indicator. And then we get a sell signal right here. Let me go back a little bit more so you can see that sell signal. Boom, sell signal triggered. As you can see, entry, stop loss, take profit 1, take profit 2. Price drives down. And as we can see, a bullish closure. So we move stops above this bullish candle, right? Price continues down, hits a 1-to-1. So move stops to break even, bouncing off a key bullish level, the DF level, as well as grabbing bullish liquidity to the left over here, EFLS. And then stops to break even, price hits break even, then starts moving up. This is where the buy entry now comes into play because we have a bounce off the bullish DF level as well as bullish liquidity being grabbed here from the left. And then price coming up and breaking key AOI levels right here. With a break and tap on the 15 and the 30-minute and a 15-minute buy signal. So two of the entry models coming into play to give us this 1 to 2, 70 pips. And then we start grabbing bearish liquidity at this point, tapping into bearish key TF levels. Bearish liquidity being grabbed over here, 1, 2. And as you can see, price then starts selling off to the downside, breaking below AY levels. And in this instance, our stops would have been initially around about 100 pips, 95 to 100 pips, but we moved stops down and managed it to around about 50 pips. So we've cut stop loss in half. But again, at this point, very choppy. If you've taken a break even and a win, you would probably call it a day at that point. I wouldn't be looking to take any more trades. But just to show the setups that are available, we get an entry. We move stops, we manage risk, we take half a loss, and at that point we start setting up for buys, right? Because now we are retracing. We can see EF, it's the bullish zone right here. We're breaking above key AOI levels provided by the indicator 1, 2. So there's bullish direction. There's a lot of bullish confluence for this trade. There's an inside bar candle on the 4-hour time frame, 4IB, bullish. Potential for high volume move incoming, which is what we get. Then we get a 15-minute buy signal, and then price pushes up here. It's a 1 to 2 for about 67, 68 pips. Moving stops to around about break even there as well on that trade once we get this bearish closure. So managing the trade well. So there's potential for a few trades on Wednesday. Very choppy though. And then we bounce into this rejection at the top coming into Thursday. We retrace down into the TF, DF levels, which are the bullish levels right here. And we start to bounce back to the upside. So we have direction, we have confluence, then we have a 15-minute buy signal and an IBO for entry. So there's two entry models coming into play there to give us extra confirmation. We then get a bearish closure in drawdown. So we move stop loss just below that bearish candle to manage risk. And then the next candle flies to the upside there, hits 1 to 2 for 60 pips. Beautiful DTG system setups, entry models. Then we have a sell opportunity, right? Because now we're getting rejection of this level at the top, these AY levels from the indicator. We also get a tap of the TF bearish shown right here, retest of it, boom, and then we start selling off the downside. We also have a 6IB that we're breaking, again, potential for a high volume move. This was right at NFP and unemployment, right? So we get a bullish closure right here and we move stops to break even, because if we get a bullish closure and a break of structure in a sell position, we don't want to be in that trade anymore. And as we can see, we get out of break even, then boom, NFP unemployment comes out, absolutely flies to downside. So we got the NFP unemployment direction correct. Just played around for a little bit there just before it dropped, which is fine. Then later on, we get a retracement into FF and the previous DF zone with rejection and breaks below AY levels with a 15-minute sell signal, as you can see over here. Entry, stop loss, take profit 1, take profit 2. And that drives down and then get a bullish closure. Move stops above that bullish candle. You take a small loss right there. But that would be it pretty much. Then coming into bank holiday Friday, US bank holiday, 4th of July, we get right here buy signal with direction, with confluence with the inside bar candle, with break and retest of key AY levels from the indicator, and a 15-minute buy signal. You get a 1 to 2 there, 90 pips. This is early Asian session. And that concludes the day. There's a 15-minute buy signal AY, but as you can see, it doesn't get triggered. And that concludes the week pretty much. A decent week, lots of setups. And this is how it would have played out, right? You got 7 potential wins for a 14 risk to reward ratio if you're risking 1%. 3 break evens and 1 loss, which was sorry, no, it was 2 losses. Which would be so there was 2 losses in there, right? So we had this loss, and this loss. Yeah. So there's 2 losses in there, although this would have been a half loss and this would have been a half loss too. None of the losses were full loss trades. They were half loss because we managed risk on those trades. So it would have been around, yeah, it would have been a total of 1 loss actually. That's why I did that. My bad. That's why I did that. So it would have been 1 loss in total. There was 2 losses, but a total of 1%, right? So that makes more sense. Right there. Cool. So yeah, 2 losses, 1% loss, because we managed risk on both of those trades, moving stop loss to half. 7 wins, 14 potential for a 14 RR or 14% gain. Risking 1%, that will be 13%. That's right. Because 14 minus 1 is 13. So that if you're risking 1%, you would have made 13% last week. If you're risking 2%, you would have made 26% last week. If you took every single one of these trades, which is not obviously realistic, but you can see following the system using the DTG system, DTG indicator for entries. If you catch even a majority of these trades, the numbers are still in your favor, right? Even if you catch 1 or 2 of these trades and you stay consistent with this over the course of the next 6 months, once you join the academy, you will see the results. You will see how the system plays out over those months and how you can be profitable, right? All you have to do is catch 1, 2, 3 of these trades per week, and bam, you're becoming a profitable trader over the course of 6 months to 12 months. So if you're interested, if you want to learn more information, there is a link down below in this video to get a hold of the system yourself and start trading gold with us this week and catching these setups. If you have any questions, please let me know down below, and I'll see you guys in the next video.